Why did Warren Buffett buy this oil stock? Occidental Petroleum. At the current price, the company's worth $55 billion. It's got $5.3 billion of cash and investments and $20 billion of debt. So the enterprise value is $78 billion. Meanwhile, the company has reported $28 billion of revenue over the last 12 months, $3.9 billion of net income and $4.1 billion of free cash flow. So the stock is now valued at 14 times earnings and 19 times free cash flow. Occidental Petroleum has not had the best couple of years. Including dividends, the stock has returned negative 9%, while the S&P 500 is up 34%, and the XLE Energy ETF is up 22% over the same period. But the performance of Occidental isn't that surprising. Back in 2019, the company won a bidding war with Chevron for Anadarko Petroleum, but in winning that deal, Oxy ended up losing. The company ran up massive debt, issued preferred stock to Berkshire Hathaway at onerous terms, and then took a leveraged balance sheet headfirst into the pandemic. Oil prices were crushed and turned negative in April 2020. Occidental stock went below $10 a share, a decline of 90% from the peak. Later, as oil prices recovered, the stock gained over 500%. But despite going nowhere for the last 2 years, Occidental does seem to be making progress. Production levels beat expectations in the second quarter, while free cash flow and asset sales have helped to pay down debt. The company acquired Crown Rock earlier this month for $12 billion, which adds high-quality acreage to the business. And Occidental is even making progress with its Stratos direct air capture, which aims to pull carbon dioxide out of the air. There's a belief among some investors that Occidental is now a coiled spring, ready to break out with higher oil prices. Clearly, Buffett agrees, as Berkshire now owns about 28% of the company. But the question is why Buffett chose Occidental over more diversified names like ExxonMobil or Chevron. The likely answer is that Occidental offers the purest play on a rebound in crude oil. A leveraged balance sheet and strong oil assets means that Occidental's earnings can move sharply higher with help from oil prices, and this can be seen in the stock chart. When oil prices go down, Oxy goes down further, but when they rebound, Oxy rallies more. The obvious risk here is a deep recession, because that would likely cause oil prices to collapse, and it's a real risk with interest rates where they are. But many analysts see oil prices as closer to a floor than a peak. There simply aren't that many oil wells that are profitable when oil is below $60 a barrel, and that puts a limit on supply. So Buffett owns Occidental because he thinks oil prices are unlikely to go much lower from here, and if that's the case, the company can continue to drive significant free cash flow, pay down its debt, and boost its earnings. Over time, that should be a winning combination for shareholders. And it's never wise to bet against the Oracle of Omaha. But these are my personal opinions, not financial advice, and I hold no position in Occidental Petroleum. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.